Ladies and gentlemen, good day and welcome to Q4 and FY23 earnings conference call of Mayur Uniquoters Limited, hosted by Monarch Networth Capital. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rahul Dani from Monarch Networth Capital. Thank you, and over to you.
Yeah, thank you, Shri. Hi, good afternoon, everyone. On behalf of Monarch Networth Capital, it's our pleasure to host the senior management of Mayur Uniquoters. We have with us Mr. Suresh Kumar Kodar, Chairman and Managing Director of the company, and Mr. Vinod Sharma, the CFO of the company. I would now request the CFO, sir, to start with the opening remarks, and then we'll move to Q&A. Thank you, and over to you, sir.
Thank you, Rahul. Good afternoon, dear investors and analysts. Ladies and gentlemen, it's a great pleasure to be here to share with you the performance of Mayur. Thanks for giving your precious time to join Mayur Uniquoters Limited Q4 FY23 conference call. Mayur Uniquoters Limited, being a market leader in the synthetic leather industry and an organized player, has been able to leverage the emerging opportunities and delivered exemplary performance in past years, both in national and international business markets. Now, I would like to start with financial highlights for Q4 FY23 under review, and we will also reply your queries after our review on financial results for the quarter. The company has achieved revenue from operation on a standalone basis amounting to rupees 199 crores, PBT 34.22 crores, and PAT 27.38 crores during the quarter. The revenue from operation is increased by 17%, and PBT and PAT both have increased 5% over the last quarter. The revenue from operations on consolidated basis is rupees 193.24 crores, PBT 29.3 crores, and PAT 23.38 crores, and the revenue has increased by 9%. However, the PBT and PAT both have decreased 12% during the quarter. Our endeavor is to make the company a preferred supplier for the leading OEM, especially in US and European regions. In OEM sector, our export is going to be increased in current and next financial year, as we have been selected and also received a good and confirmed order for some upcoming new models in export and domestic markets, for which supply for some of the new models have already started, and some models is expected to start from second quarter of the current financial year. So we are hoping a very good performance, especially in these 2 years in exports market. While pursuing our business interest, Mayur Uniquoters has also been endeavoring to fulfill our responsibilities towards the society under the corporate social responsibilities programs, contribution towards regular plantations, and plan to do at large scale in coming years. The company has also adopted many happy schools for education of children, and the company has worked on education for all and underprivileged children, various healthcare initiatives, especially child skill development, water for all, sanitation at school area, distribution of books, bags, clothes, and most importantly, family planning and family welfare schemes in the villages. The state government has recognized these initiatives taken by Mayur on various platforms. I am thankful to all the investors for their valuable time, to those who became the part of this earnings call. With this positive note, I would like to conclude the request and request you all to open the forum for questions. But we also request that due to time constraint, duration of this call will be around 55 minutes. We therefore request to kindly avoid repeat questions, and we will not discuss volume data. So please avoid volume-related queries.
Thank you very much.
Thank you, Rahul.
We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Dhiral Shah from Phillip Capital. Please go ahead.
Yeah, good afternoon, sir. Thanks for the opportunity. So what kind of volume growth we have seen in Q4 and for the full year FY23?
Yeah. Hello?
Hello, am I audible?
Yes, sir.
Okay. So what kind of volume growth we have seen in Q4 and for the full year FY23, and also particularly for the export OEM side, what was the growth, sir, in FY23?
The volume growth in Q4 is around 17%, and the full year is 14.36%.
And so what was the growth in the export OEM side in FY23, sir?
In the year, export side is 18.38%.
So this is for the Q4 or FY23?
It is FY23 is 18.38%. Okay, and the Q4 is 45%.
So 85%.
45% in Q4.
Okay. And so for the full year, what was the contribution of PU?
Was around for the full year, na?
Yes, sir. For the full year and even for the Q4.
Full year, PU division contributed around 8 lakh meters. Okay, and during the quarter, it is around 2 lakh meters.
Okay. Thank you so much, sir.
Thank you.
Thank you. We have our next question from the line of Nirali Gopani from Unique PMS. Please go ahead.
Yeah, hi. Thanks for the opportunity. Sir, if you can just talk about the demand scenario, like overall what we are seeing in footwear, domestic and exports.
Demand scenario in the current year, we are expecting around 5% in footwear, nearly, and export around 45%.
Okay.
Hello?
Yeah, I can hear you, sir. Yeah.
Yeah.
And domestic?
Domestic, overall, we are expecting around 6 to 8%. And overall, we are expecting around 17-18% growth in this year.
In the revenue terms you're talking about, right?
Yeah.
But if I'm not wrong, in the last call only, Suresh sir had mentioned that he is looking at a revenue of about 1,000 crore for FY24. That comes to a growth of about 30% in revenue.
30% in revenue.
Yeah, he said 1,000 crore in FY24 and 1,200 crore in FY25.
We have revisited our projections and fine-tuned as per the detail given to you. So you kindly revise the data.
You see, these all expectations were given on the basis of expectation given to us by auto OEM. But auto OEM change quarterly. I mean, suppose they have given us the order for particular model, and that model was supposed to start in a particular month, but it has delayed for 3 months or 6 months. So something like that happened. So we give you the overall projection according to the projection of automotive industry. Whatever we find, that will increase in this year, 23-24.
Because I thought that we had solid orders for FY24 and hence...
I'm sorry, you're sounding muffled, Nirali.
Your voice is not clear. I think sound is buffling.
Is it better now?
No, it is still muffled.
Can you hear me now?
Yes.
Yeah, now it's clear.
Okay, so then, sir, what you are trying to say is that whatever orders are delayed will go to FY25?
FY25, we are expecting another 25 to 30%. 25% nearly. And very good, actually, as I have already told you, that we are expecting a very good sell performance in export, especially in OEM. And the next 2 years, we are expecting around 60% and 70%. This year, we are expecting 60%, next year 70% sales growth in export OEM.
So this correction which we have done in the guidance, that is basically on the domestic side, or that is also on the export side only, and after the correction you are seeing this kind of growth?
Based on the numbers or the requirement given by the OEM customers. So we have, we will sit and inform you the actual expectations which are going to be happen.
No, I understand that. What I was trying to understand is that the order which has been delayed, that is also on the export side only, right?
Yeah.
Okay, okay. And what kind of margin do you see is sustainable?
Yeah, the margin which we are currently having, it will not be lesser than that. So still, it will not be lesser than that.
So either this margin or better than that. That
Yes.
is what you are trying to say.
We can say that.
Okay, and this other expense has grown substantially. So earlier that the reason was because of the transportation cost, but still it's a significant growth. So can you just elaborate like what are the reasons for the such an increase in other expense?
And you know, in last 2-3 years, because of COVID, the tour programs by the marketing department could not happen. But in last year, we have allowed them to go outside, even in India as well as outside India. So traveling expenses have increased, and some CSR expenses we have increased, and other consultants, and we have hired, because in last after GST implementation, we got some GST audits and consultant service and all. So all these type of services have increased, and capacity utilization also increased because of supply requirement to exports. So consumables, etc., repair maintenance requirement also increased. So because of that, these other expenses have increased this year.
Okay. Well, and what kind of outlook do we have for the PU for this year? Is the demand picking up? Is the pricing difference with the Chinese import, is it narrowing down? You can throw some light there also.
You see, we are fighting with the government of India, and there is a lot of manipulation going on, as we have discussed previously also. And I'm fed up, and we have met the government commerce department. Then again, we have persuaded them to put up a anti-dumping duty. In anti-dumping duty, the benefit is that you cannot manipulate in invoices. That is per meter duty, certain duty. But even in that, these guys have started manipulating by showing half the quantity, So this is going on like hell. So I met just 1 week back to the Commerce Department, and we said that this is happening and you people are not supporting. We are 4 PU manufacturers and we are in a very bad shape. And further thing, that even in China, whatever export is done in footwear to other countries, that is 80% is made out of PU leather. And in India, we are not making PU leather sufficient quantity. We are making only PVC. And those who want to improve that Indian footwear industry should use PU. But because of these things, we are not able. So finally, government is losing the big export business. So they wanted us to give a letter. We have given a letter. They say that we are going to discuss in maybe next 10-15 days again we will go there and talk to them. In the meantime, what we have seen that these kind of things very difficult to get it over. I don't know what kind of action government is going to take. But now we have find out one solution that, all the big brands, like in automotive, so the big international brands, they are buying footwear from outside and putting up their brand and selling in a good quantity. But their quality control is very high. And they inform their supplier to use particular kind of raw material from particular supplier. So we have been in touch with 2-3 big brands. They have visited our factory also, but this is also little time taking like automotive industry. First you have to show them your factory, tell them about you, then they will consider. It is like that. Yeah. So we have already started consulting with these guys, and they are very happy. And one good thing what we feel at the moment that they are fed up with China and they want to shift to India. So they are taking good interest. If that thing happens, it will take little time. And then we'll get the margin also and the business also. Because they need a specific quality which you don't get with the Chinese suppliers or those who are importing. They are giving that quality, giving in cheaper prices. So that is the one way we are working very seriously on it. Then we are working very strongly on sports shoes. Sports shoes are expensive. I'm talking this export shoe also, the quality export shoe, the branded export shoes. In that, they need a good material and they pay a good price also. But again, that's the same thing that we have started discussing. We have started submitting samples and they are working on it. I think in the 3rd or 4th quarter of this year, we should get some results. And this is like this, if 1 or 2 big brands start buying the material, then others will follow. And other thing, the leather goods. All these big brands, if you go to the showroom, you will find gents, ladies, purses, belts, bags, all those things. So there also they buy PU material. So once these big brands are approved, then there is a big scope in leather goods where we are not selling almost like nothing, So that area can also be opened. So I am very hopeful. Of course, it will take some time, but it will happen.
Thank you. We'll take our next question from the line of Deepak Lalwani from Unifi Capital. Please go ahead.
Hi, sir. So out of the consolidated revenues, what will be the share of our OEM exports in the business?
OEM exports business is around you want to know the export side in consolidation or
just the
we have done from India?
Yeah, so on the consolidation side, yeah, the OEM exports in total.
And we can give you right now the export side value is around 142.30 crores. This is the export OEM, and the remaining is you can take the subsidy wise consolidated export this is the export, but you want export, consolidated export. We can give you separately. You can send me the mail. I'll check and give you the detail.
Sure. Sir, so you mentioned in your earlier comments that this 140-150 crore piece will grow at a higher rate of 60-70%. So if you can explain, elaborate on what are the drivers that will take this number, the growth number to 60-70%. If you can tell us what the ramp up of the Mercedes, what will be FY24, 25, and also.
Mr. Lalvan, your voice is very slow.
Okay, I understood your question. Now, listen, as I told time to time, that automotive industry takes time. Suppose today they approve a particular model, and that model is supposed to start maybe after 6 months or 9 months. But they give the approval at least 1 to 1.5 years in advance to the supplier that okay, for this model you will supply this material and we will be giving, we will start making this model from so and so day. So accordingly we calculate that when the supply will start. So many times it happens that it gets delayed. It never cancels. What we are saying you today, that this will be export on the basis of the order already we have got. I mean, they have already selected us for particular models which according to them are going to start in particular quarters. Accordingly, we are telling you. So whatever we are telling you right now is, you can say indirectly, the order is in our hand. It can be delayed. I don't know, maybe 3 months delayed or 6 months delayed. Some quantity. It cannot be that suppose if I have got approval of 4 different items and all will be delayed, Maybe one item may be delayed, like that only.
Sir, so is it fair to assume that it's largely the Mercedes order which will ramp up and also the BMW which should start in?
No, but BMW will start by the end of 24, not now. We have started with Thailand, little bit quantity, that is hardly 2,000-3,000 liters per month. And another model which we got approval, that will start by the end of 24 or the beginning of 25. That also requirement is about 30 to 35,000 meters per month.
Okay. And what will be the value of the Mercedes order for 24, 25?
This year we have done about 40 to 45 crores. 43, 44 crores. This year, 22, 23, and it will be same next year also. I mean this year also.
Okay. Sir, are there any other OEMs which you have added, which give you the confidence of this 60% sort of a growth? I just wanted more clarity on that.
See, we have added in USA the Ford Motor. We have added.
Okay.
Ford Motor we have added, and with Stellantis, more and more models we have been introduced. I mean, we got a business from our competitors,
Understood. Right. And on the domestic side, if you can give some your comments on the footwear segment, how the recovery is shaping up, and also the furnishing side, if any progress you have made on that segment.
You see, so far as footwear is concerned, it was down in April also, and it was down in March. March, April, May was down. Whereas it is a very strong period. But unfortunately, this year we don't know what happened. The market is not that strong. People say from June it should improve. And little bit improvement we have seen in last 7 days. And I think it should improve, but it is very difficult to say. Like I'm talking about automotive. I can't tell you about footwear. Footwear only when I get this sport shoe business, then I can say the business will increase. And here also should increase because from last year, this year, business is less in total footwear industry. And further, because we are supplying high price shoes material, so that is more affected. But even though we have done, how much increase we have done in footwear?
Last year?
This in 23, 22, 23.
So we have done around 10%.
Even in spite of this, we have increased our sales to 10% in 22, 23. And 23, 24, we expect almost same, 6-7%. According to today's condition, if the things improve, it may increase. And it will increase.
Okay.
You see, the market is very difficult to say nowadays. What happened suddenly, we never thought that footwear market will go down so much, but gone down. So that.
And on the furnishing side, sir, what?
We already appointed 350 dealers. And we have programmed in this year to add another 300 minimum. And sales is increasing, but this is B2C sale. And in retail, we are supplying to a particular, say, those shops who are keeping different type of furnishing material. Now they keep our.
Ladies and gentlemen, we have lost the connection of the management line. Please stay connected while we reconnect them. We have the management line back on the call. Please go ahead, sir.
Yeah, we were talking about furnishing sale. Is it? There is that gentleman who were talking.
Yes, sir. I'm listening. Yeah.
Yeah. So you were talking about furnishing sale. So this year we have increased 60% sale. Although sale is not very big, but compared to last year it has increased 60%.
Yeah.
And next year, this 23, 24, about furnishing का लेकर 30%.
Then 41%. Next 2 years, 30%.
Next 2 years, you can say 30% and 40%. You see, this retail business takes time, but the margin is good there. But I think it will take at least 2 years minimum to establish the name and all that. Because first of all, we have to distribute and make the dealers all over India. Now we have appointed 4 salesmen for North, South, East, West. And then we are appointing distributors also. We have increased from 2 distributors to 3 distributors. So it will take time, but we are getting good response. Every month, the retail sale is increasing. Nowadays, we are moving to this, this cinema halls, this PVR and all that, because they have good quantity, so that kind of a business also a little bit we have started getting. And now we are approaching to the furniture manufacturer also, and they are also giving us good response. All these things take time, but we are confident that it will keep on increasing. And in furnishing, 30-40% improvement will be there. These I'm talking minimum every year, because the quantum is less, no?
Thank you, sir. Mr. Lalwani, I request you to come back in the queue for follow-up questions. Ladies and gentlemen, in order to ensure that the management is able to answer queries from all participants, please restrict your questions to 2 at a time. You may join back the queue for follow-up questions. We have our next question from the line of Avnish Chandra from SMIFS. Please go ahead.
Congratulations for that, sir, and Sharma, sir, on a good set of numbers. Sir, you have highlighted very good growth path for next 2 years, 17, 18, and then 25, 30%. So what would be the corresponding CAPEX plan for next 2 years in FY24 and 25?
CAPEX plan. CAPEX plan next 2 years.
Next 2 years, you see, at the current position we don't need, but we are thinking very seriously to start a plant in Mexico. So if that happens, then there will be a capex. But we are not sure unless, this what they are saying for next 2 years, they will increase this business. If we see really it is happening, then of course we will go for it.
Okay, so to reach 1,100 crore, we don't require any CAPEX?
No.
Yes, we don't require.
Okay, so as such, there is no CAPEX plan as on today.
There's a major CAPEX plan we don't have, but a small CAPEX plan is continued.
So 5-10 crore of maintenance CAPEX plan, okay.
Actually, we have sufficient capacity right now, and up to 25, we don't need any further major CAPEX.
Okay, sir. And sir, second question on the PU side, you have already highlighted all the issue, and you have done 8 lakh meter in FY23. So any guidance on PU side, what can be achieved in FY24 and FY25?
You may achieve over next 2 years.
I have explained that just now, that we are working with all the big brands for PU. I just explained.
Any numbers, sir? Like 8 lakh meter we have done. Can we do like 10?
This year we have done 8 lakh meters.
So this year how much we have done?
8 lakh meters.
8 lakhs meters. Okay, this year minimum 25% increase होना चाहिए.
Minimum 25%. Minimum.
Okay, sir. I will come back in queue. Thank you.
Thank you.
All the best.
We have our next question from the line of Viraj Kacharia from SIMPL. Please go ahead. Mr. Viraj Kacharia, please go ahead with your question. Since there is no response, we move on to the next question from the line of Devansh Negotia from SIMPL. Please go ahead.
Yeah, thanks for the opportunity. Sir, if you look at our console minus standalone, in overseas business, there is negative sales of 6 crores and a EBITDA loss of 5 crores. So, usually what we see is that Q1 has some losses at overseas operation, and then in subsequent quarters it gets reversed. So, this time, how is it different? I mean,
your voice is not coming clear.
Is it better?
You speak slow so that we can get clear voice.
Okay. So in overseas operation, if I look at console minus standalone, there is negative sales of 6 crore and there is a EBITDA loss of 5 crore.
Yeah.
And historically, what we see is that whenever there is some difference between console and standalone, it gets reversed in subsequent quarter through sales in by sales in our export subsidiary. So this time, how is it different? Are there any write-off of inventory or receivables?
I tell you, this will happen in this quarter. Actually, in March quarter, our inventory has increased to the double. That's why the profit realization in standalone is reflecting, but not in console. But in this quarter, this will be reflected.
So basically, there will be some step up in sales in Q1 because there is some inventories that we are holding in the subsidiary.
We are trying to reduce the inventory, and as far as the reduction in inventory will take place, it will be reflected in the consolidated results also.
So in our export, we mentioned that Mercedes we are guiding for I think flatter sales. For Ford is also there, and furnishing is the third part where growth is high. So if you look at, if you can break up this 30-40% guidance that we are giving in terms of which are the key segments, and if you can break up that growth in different segments over the next 1-2 years, how do we see this business growing in different export segments?
And we have only two segments in export OEM and export general.
Export general means all over the world we are
all over the world.
Different kind of products. Maybe automotive, it may be footwear,
it may be policing.
It's all including.
So it is mixed actually in general. And OEM means we have contact with the OEM automotive customers.
Okay. And how export OEM is distributed in terms of number of models, number of customers, and what is the mix indicatively in terms of life cycle of the bulk of the portfolio?
Generally, life cycle of a particular model is 7 to 8 years. It depends. If it is good, it may be more. If it is not selling, they close in between. But generally, 7 years.
Okay. And in terms of number of models?
I cannot tell you right now what are the number of models. But there are many models. Every time some models, old models are closing, new models are coming. Now how we are getting a business? Because new models are coming more.
So now new model mix in current sales is a significant part of our mix?
In current sale, in last year, FY23?
Yes.
Yeah, it is some part of supply is to new models, and major part will take place in this year and next year to the new models.
Okay. And any risk that we see to our export scale of business?
Sorry?
Sir, any risk to our assumptions that if at all you see any risk to this growth that we are getting?
We are telling you the expected growth based on the confirmed and good orders.
Okay. And any in existing sales, any product which is at the end of life cycle?
Existing life cycle, which is...
But there are so many models.
There are so many.
Model that will start 4 years back, some 6 years. It is very difficult to say offhand that how many models are getting away and how many new models are coming. But when the sale is increasing, that means new models are coming. The models which are coming is more than the models which are coming.
Hello?
You got the point?
Yeah, so basically the question was that, if you look at our journey in exports in the last 5-6 years, we've been trying to get new customers, trying to get new models. But, even the last time we were expecting new business to kick in, but it got delayed. And a lot of existing models is an end of life cycle kind of a point. So, when we expecting this 60-70% growth in exports, what is the risk you see in terms of execution on this and, of the existing business?
2 models have already closed. The supply is already closed for the 2 models. And they are now given us the supply orders for new models. And also, if you see, the overall sale is growing. Means the new models are coming more.
Thank you. We have a next question from the line of Shashank Kanodia from ICICI Securities. Please go ahead.
Yeah. So I believe the auto OEM export is the highest margin business for us, right?
Yeah.
So what is the approximate margin range in terms of, let's say, if the base business is earning 15% EBITDA margins, so is it safe to assume that this business might be earning 25% kind of EBITDA margins?
No, I can't tell you that how much is that, but it is increased. It is better than other areas. Totally.
Right. So, sir, in your initial comments, sir mentioned that in Q4, the total volume growth was 17%, whereas it was 45% for auto OEM exports. So, sir, in all likelihood, अपने margins this quarter should have increased, right? Gross margins and EBITDA margins both, but both have declined sequentially.
But it depends on other areas also, na? Like I told you, footwear. Footwear price one time in the beginning when this COVID was happening, the prices were increasing. Now it is decreasing. From last 6-9 months, the prices is decreasing. So it depends. There are so many areas where somewhere it is increasing, somewhere it is decreasing. It depends on market.
Okay. And so now, given the fact that crude is down, so are we still having some RM benefits in terms of?
Nowadays, what I have understood, that the prices all depends on demand and supply. If the demand is more, supply is less, the price increase. And these crude prices, of course, it makes the effect, but ultimately demand and supply. Now, the demand is not very good worldwide. So, the prices are now stabilized, not increasing for raw material prices. It may decrease, we don't know. But the market is not very good because you know what is the Europe situation. America's situation is also not very good. So export business is down. China is also not doing very well. India is doing little better. So it is very difficult to say whether the price will increase or decrease. Sometimes we see when the price increases, the crude price increases, our raw material price decreases. When crude decreases, our raw material prices increases. Why? Only because of demand and supply. And these things are, all chemicals are just like a stock market, So you see, we have to be very careful. Now, the prices when started going down, you don't know whether at what time you should buy and you should not buy. It is very difficult to say. Of course, actually when the crude price is down, it makes a little difference. But what I am trying to say overall, demand and supply. If that particular chemical, that is the demand and that is the supply. So at the moment, demand is not very good all over the world. So I don't expect any increase, maybe little bit down. But we don't know how much.
Right, sir. So, sir, given the fact that our auto OEM exports are expected to grow 60-70% and the raw material prices stabilize, so returning to 20% trajectory is very much on the cards for us, right? Margin trajectory next year.
We can take this, but as already told by Mr. Poda, it depends on other segment also. How much they are contributing.
Right. So, sir, but we are quite confident of achieving 900 crores of sales this year and 1100 year after, right? So that is base case growth prospects for us, right?
Thank you. We request you to come back in the queue for follow-up questions. We have our next question from the line of Muskan Saktani from Bastion Research. Please go ahead.
Good afternoon, sir. Thank you for the opportunity. My question is...
I'm sorry, can you use your handset, please?
Hello, am I audible now?
Please use your handset mode. It is not clear.
Now am I audible?
Yeah, it's now clear.
Okay. Hello, sir. My question is, if you look at the long term, inventory days and inventory in general have gone up substantially. What can be the potential for the same?
Increase inventory level. In coming years, it will substantially decrease or?
Yeah, it will definitely.
It will decrease.
See what happens. It takes 2.5 months time to material to reach to USA. And then 1.5 months we have to keep the stock. And because of this COVID and all this situation, this Ukraine and Russian situation, the orders varied too much. Since we have to keep the 4 months stock, I cannot go empty, If I am not able to supply in time, then I have to send it by air. And that costs more than the cost of the material. So that's why we have to keep more material. Now the situation is improving, and I think in this year, the stock will reduce considerably.
Thank you. Ladies and gentlemen, we request you to restrict your question to one at a time. We have a next question from the line of Rahul Picha from Multi-Act India. Please go ahead.
Yeah, thanks for the opportunity. My question is on the other expenses. This year we have seen a 40% growth in other expenses compared to last year. You have highlighted some of the reasons which might have contributed to that, but going forward, do we see that this new base as a reasonable base, or we think it can keep the other expenses can further increase from here onwards as well?
You are asking for the other expenses, whether it will be increased or decreased?
Yes, so this year, on an average basis, quarterly, we have been incurring other expenses of around 34-35 crores as compared to around 25 crores for FY22 per quarter. So we have seen a very sharp increase. So just wanted to understand if this 35 crore is higher because of certain one-off reasons, or this is the new base that we should work with.
See, listen, when you increase the business, like we have started 6 months back, this furnishing business. As we told you that we have started appointing new dealers, distributors. So it all needs the expenses. In this year, we have appointed 4 marketing people in all over India, north, south, east, west. And when we are appointing new dealers, it costs, you have to send the sample books, you have to send everything. And further, as I told you that we are working on these big brands. So big brands don't come just like that, You have to do a lot of things. And like in furnishing, we have to make a lot of, spend some money in advertisement also. So these other expenses, you cannot expect to reduce. But we have to increase the sale. Compared to sell, it will not increase. But because of this furnishing business, this is the new business, and B2C business, you need to spend a lot of money. We are not spending that kind of money, which I should have expense, because I am going very cautiously. आप समझ रहे हैं कि नहीं बात को?
Right.
क्योंकि आज रिटेल बिजनेस में तो आप देखते हैं दिन रात यार कितना एडवर्टाइजमेंट करना पड़ता है और करना पड़ता है. वो मैं आंख बंद करके काम नहीं कर रहा हूँ. आई एम गोइंग स्लोली. Could have been another company, we could have spent at least 30-40 crores on just on advertisement. But I am going very slow. So some expenses have increased because of this. Whenever you want to enter in the new line, you are bound to increase the expenses. That is the expenses for that time. But the result is for the longer time, So this thing has to be done in the business.
Thank you. We have a next question from the line of Dhruvesh Sanghvi from Prospero Tree. Please go ahead.
हेलो सर, शायद मैंने मिस किया हो तो आई एम सॉरी. हमने इस साल कितना मीटर बेचा है इन टर्म्स ऑफ वॉल्यूम?
Around 28.36, 24 lakhs meter, 284 lakhs meter.
तो क्वार्टर का होगा ना, मैं पूरे साल का पूछ रहा हूँ.
मैं पूरे साल का ही बता रहा हूँ.
आई एम सॉरी, यस, ओके. एंड 24 लाख मीटर, राइट? 28 lakh meter. Okay. And
284 बोल रहा हूँ.
हाँ, 284.
Hello.
Hello.
So we've lost this connection. We'll move on to the next question from the line of Kaushik Mohan from Ashika Stock Broking. Please go ahead.
Hi, sir. Congratulations for a good set of numbers. So my basic only one question that I have, and you have answered all of them in the previous question. So one question that I have it is on the margins front. So the whole year we are closing operating margins is around 18 to 19%, and cash flow conversion is also very, very strong at this year. So can we expect this kind of strong cash flow conversions in the coming years? Or what exactly driven this cash flows to be so strong? Cash flow from operations which I'm talking about.
You see, you are talking about expectation. You see, the businessman always try to increase the margin. We try our best to increase the margin, but it all depends on the market also, which side market is moving. So far as concern is declaring in advance what will be the percentage of the margin. It is very difficult to say the pinpoint. We are doing our best and we will definitely try to increase. And it should increase, but I can't tell you how much.
Thank you.
It is impossible.
We have our next question. So should we go to the next question? We have our next question from the line of Viraj Kacharia from SIMPL. Please go ahead. Mr. Kacharia, please unmute your line and ask your question. Since there is no response, we'll move on to the next question from the line of Vivek Kumar, an individual investor. Please go ahead.
Thanks for the opportunity, Podarji. Can you throw more light on the domestic OEM? There is no discussion on the domestic auto OEM. How is the business going to shape up for the coming 1-2 years? And Mexico plant, for which client, or is it for general US market? And when can we expect the plant in Mexico? These two questions, Podarji. Thank you.
Domestic OEM is also, we are expecting...
1 minute. First of all, I would like to tell you that almost all the OEMs which are doing business in India, we are supplying to them, number one. Number two, there are many models, low-cost models, high-cost model, middle-class cost model. Now, Mayur is supplying only to high middle class and higher class models because of the prices. So, of course, even then, the sales are increasing. You please tell what are the sales expectations, how much increase this year and how much we are going to increase next year.
And Mr. Kacharia, as in last year, we have increased in domestic automotive around 24%. Okay? Overall, over the past year.
So 24, any guidance?
24%.
No, I'm asking FY24, any guidance?
And FY24, we are expecting around in double digit only. But how much it will be there, I can't tell you exact percentage, but we are expecting double digit increase.
Thank you. We have our next question from the line of Shashank Kanodia from ICICI Securities. Please go ahead.
Yeah, so I just wanted to confirm. So this year we should be doing 900 crores of sales, right? And in FY25, 1100 crores. So this is very much doable, right? Or any risk to it?
Yeah. We are expecting that.
Thank you.
Yes, 900 and 1100. So far.
We have our next question from the line of Neeraj Mansinka from White Pine. Please go ahead. Mr. Neeraj Mansinka, please go ahead with your question.
Sorry, I was on mute. My question is, what was the revenue breakup for the quarter for domestic OEM, export OEM, and auto replacement?
Well, in percentage term?
In rupees crore would be okay.
In rupees crores, okay, not down. In export OEM, 60 crores. and general 17 crores. Auto OEM domestic 39 crores. Replacement 32 crores. Footwear 44 crores. Furnishing 3.25 crores. And you can take balance amount in others.
Okay. And this number for the export OEM was how much for last quarter, which is 60 crores for the quarter?
Last quarter, export numbers were it was very less. In fact, quantity was very less. 4 lakh meters.
No, I'm talking about the rupees crore in December quarter.
Rupees in crore 28 crores.
Per quarter,
December quarter.
28 crores. Okay, sir. And sir, can you just repeat? I could not get that on the BMW order. Can you repeat on what is the expectation? How do you just see the scale up happening?
BMW.
will start.
I missed that. I could not note it down.
It will start in August.
No, it will start from. I told the previous this thing that by the end of 23 or beginning of 24.
Q1.
Okay. And you're talking about 30,000 meters per month run rate.
Yes.
Yeah.
Okay. But sir, this I think 2 quarters back, this was supposed to happen in I think Q1 or Q2 of this year. So I'm guessing there's a delay from the customer side.
Yes, it is delay from the customer side.
And so, what are the other large orders which are coming up apart from the BMW on the export?
Ford Motor, USA.
How much would be that add to you, sir?
Chrysler तो आ ही रहा है.
New model.
इसलिए new model.
Sorry.
New company.
What I'm asking is, apart from BMW, what are the large export OEM orders that are upcoming for you?
Export order is more is from Slanted, USA.
Okay, so I'm talking of new orders. I'm talking about like the BMW at 30,000 meters. Other new orders which will.
Ford से कितना?
I have to see and tell you. Right now it is difficult to tell, but we have got orders from Ford also.
Okay. Okay, sir. I'll come back on the queue. Thank you.
Okay.
Thank you. We have our next question from the line of Dhiral Shah from Phillip Capital. Please go ahead.
Yeah, thanks for the opportunity, sir. So for the full year, export OEM volume would be how much, sir? Is it 18.5 lakh meters? Hello?
Ladies and gentlemen, we've lost the connection of the management team. Please stay connected while we rejoin them. We have the management team back online. Mr. Shah?
Yes. So for the full year FY23, what was the export OEM volume?
And the entire year?
Yes.
OEM, domestic OEM or export?
Export OEM around 20 lakhs meters.
So this will grow by 60% in FY24 and 70% in FY25 in terms of volume.
Yeah.
Okay, so earlier guidance was like 100% growth in FY24, but it comes down to 60%, but FY25 will be much higher growth. Again, sir, what was the PU sales in FY23, sir? You talked about.
We are telling you the growth in terms of amount.
Okay, so this 142 crore that you have talked about.
In last year we have done 142 crores. It will increase by 60% in this year, and next year around 60 to 70%.
Okay, so the volume will be again the same, or maybe volume you believe value growth will be higher.
You see, you understand. There are so many types of leather cloths being supplied. Somewhere perforation are done, in some item perforation are not done. Now perforation cost is $4 to $5. So when there is more order for perforation, then automatically the sales increase, but quantity remains same. So it depends in what type of material we are supplying, whether it is perforated material, and then also it depends on which quality you are supplying, because the prices are varying from $8 to $11 to $11.50, $11.5. So it all depends on the mix of this. So accordingly we are telling you for the amount.
Hello.
Okay. What's your point, sir? And sir, what was the PU sales revenue in FY23?
8 lakh meters.
Sir, no, this is volume, sir. Overall revenue, sir?
Around 25 crores.
Okay. And so what was the total export revenue in FY23?
Total export revenue in FY23 was 210 crores.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to management for closing comments. Over to you, sir.
Closing comments.
I must thank all of you to be the patient hearing, and I'm very happy that all the people who are there, they are excited to know about the company. In that sense, I can say that the future is good. We are trying our best, and it will be best, because there is no dearth of nowadays. One thing, that genuine leather is automotive industry is started replacing with artificial leather, because nowadays the good quality artificial leather and genuine leather, general public is not able to distinguish, and they get a good price benefit. So far as artificial leather is concerned, the sale will keep on increasing. So far, I think. So nothing to worry, and the Indian market, as it is going to increase, as we see.
Just a minute.
And Indian economy is increasing, and in next 15 years what is going to happen. So I am very hopeful, and I am very positive. Thank you once again for listening. Thank you.
Thank you very much.
Thank you, sir. On behalf of Monarch Network Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.